I wanted to welcome everybody to today's investor coaching class entitled 2020 Year in Review and Market Outlook for 2021. My name is Kevin Daniel, and I am the president of the Daniel Financial Group. I wanted to say thanks for everyone joining the webinar today because I feel it's a very important time to get something out because I feel a lot of people out there, investors, are getting very nervous about, maybe their president didn't get elected or, there's a whole lot of uncertainty out there these days. And I wanted to say thank you for all the clients out there that stuck to their plan in 2020. I mean, it was a crazy, crazy year. But those that stuck with their plan, you guys are looking pretty good right now. So I want to say congratulations because I know it wasn't easy. I received several calls at the office as the market started to fall earlier in the year due to COVID. And quite a few clients were ready to jump and go to cash, but thank goodness you held tight and you stuck to your plan. Now, the main point I wanted to make sure everybody left with today was quite simple. Opportunity manifests around uncertainty. Just look at 2020. I mean, my goodness, what a crazy year. Who would have thought we would have ended up, in such good financial position as we did? January 1st, 2020. Imagine if you were in bed and you had just woken up and you had this crazy, crazy dream. And in your dream, you saw most of what 2020 was going to bring. That's kind of scary, isn't it? I mean, 2020 was a handful, to say the least. We started off with impeachment, and then we had COVID. In fact, we're still dealing with COVID. Thank goodness for the vaccine, and to me, it seems like things are actually starting to get better. I'm very positive and hopeful. Also, we had social unrest and protests. Some of it peaceful, some of it not so peaceful. And we had a never-ending election, which maybe I would say it's probably done finally. But my goodness, it was a heck of a year. Now, given what the world and markets were facing, and you remember that dream you had. Imagine that, with the dream you got scared, and imagine that you abandoned your plan and you went to cash. Imagine that. It'd be kind of like having a crystal ball and you saw some bad stuff approaching and you just went to cash. How would that have turned out? Well, let's start off with impeachment. Let's look at 2020. April 30th of 2019, I released a webinar that was entitled The Impact of Impeachment on Your Portfolio. And basically, we discussed the Clinton impeachment and later acquittal. And basically, it was basically a bump in the road. And, that's very similar to what happened this year. January 1st from 2020 to February 4th, we were dealing with Trump's impeachment. And with this slide here, the purple line there is the total United States market. The orange line, if you will, is the S&P 500, which is the 500 biggest U.S. companies. And then the line on the bottom there, that is the international index, if you will. And as you can see, it was very similar to what happened with Clinton. It was just a bump in the road. Now, the international is recovered quite a bit since then as well. But as you can see, it was just a bump in the road. Then we had COVID-19. And on January 31st, the World Health Organization issued a global health emergency. And oh my goodness, I'll never forget the first time I walked into the grocery store and saw basically no toilet paper or sanitizers or anything like that. It was quite honestly very scary. A lot of people were hoarding things. I had clients in other states that we actually sent some toilet paper to because they couldn't get any. But it was a difficult time. It still is. The hand sanitizers, everything was just, you couldn't find anything that had to deal with disinfectants or, anything that was to sanitize us. One positive I think was very was amazing was the beer craft companies. They actually pitched in and started helping out with hand sanitizers and things like that. And I wanted to say kudos to the craft beer companies out there that helped. We were also told that we had to wear masks everywhere we go. We still are wearing masks. And, I think that's a good idea because we didn't want to spread the disease around. But anyways, it's been a difficult year, wouldn't you say? The schools were closing, so kids were staying at home, and, the families had to make adjustments. It wasn't easy. Restaurants were closed, bars were closed. So, I reached out to all clients and just to try to check on them to make sure things were going okay. And it seemed like most everybody was doing okay, but I could tell that a few people were quite depressed because they couldn't get out and things like that. So it was a very, very trying time. We couldn't travel anywhere. I'm thankful that we restricted travel from China so it would slow down COVID. But it seemed like everything was closed down. February 26th of 2020, I did a webinar entitled, "Will the Coronavirus Make Your Portfolio Sick?" Hopefully you got to see that. And basically we were just comparing that to other outbreaks. And again, the coronavirus was just like all of these before. It took a dramatic drop. The dark blue here is, for instance, with the SARS, from the start to the crisis peak, it went down almost 10%. The next month, it made the money back, and then after 3 months, well, it did quite well. Same thing with swine flu, Ebola, and Zika. But we might as well add the coronavirus to it because, well, basically the returns were the same. We're in a much better space than when we started the virus with. But I wanted to point out, your portfolio, it's built to withstand these epidemics. This is a wonderful, wonderful slide here, and this basically shows all the different pandemic and epidemics since 1970. And if we had $100,000 back in 1970, and we basically were just invested in the world index, well, that $100,000 would have grown to $6.7 million. And that's not even rebalancing or doing anything, fancy with the portfolio. But who would have imagined that we could have gone through all of these different situations and hardships and come out so far ahead? Again, during these uncertain times, well, a lot of times, well, it generally turns out to be best. March 10th, 2020, I sent out a piece, and I basically was explaining that the S&P has had corrections of -3 to -48% every single year in the last 40 years. Did you realize that? Every year in the last 40 years, the markets went down at least 3% or -48% during that year. But here's the positive. The market has ended those years in negative territory only 7 out of those 40 times. So what does that say? That means that you should stay disciplined. Your plan and your portfolio, they are prepared for times like these, and they're also prepared to recapture rebounds that can happen in a blink of an eye, just like what happened in 2020. But the only way that you can do that is if you stay disciplined, stay the course, and stick to your plan. But it's not easy to do because we have the news, we have the media, we have, all the talking heads out there making us nervous. How is it easy to stay in the market when you're reading, articles like this in the Wall Street Journal, the day the coronavirus nearly broke the financial markets? That's scary. You need to realize that a lot of these people out there, they put this out because all they're wanting you to do is to move your money from where it's invested to cash so they can earn a little commission. If you watch CNBC or MSNBC or uh, uh, Fox Business, they're always just trying to get you to move from one thing to the other. You need to be aware of that. On March 16th of 2020, I released How to Survive a Bear Attack. And basically, I explained that the recovery time from past bear markets, they don't take long at all. In fact, it's very, very quick. 2008, when the market crashed, the market came right back. Same thing in 2003. Same thing in 2020. You just have to stay the course. Bears happen. Your portfolio is designed to withstand a bear attack and prepare for a rebound. But you got to let it. You have to stay in order to get that rebound. The most difficult thing to do is to try to time the market. And what do I mean by time the market? That means that you get out of the market before the bad news hits us, and then you get back in before the market goes back up. So you have to guess right twice. And here's why it's virtually impossible to do consistently, because the market moves on information that we don't know. So unless you have that crystal ball, it's almost suicide if you try to time the market day in and day out. Research have shown that, people trying to time that market average about 4%, and that's not good. Strategies for surviving a bear attack. First, you got to be bear aware. And what I mean by that is that you need to have your portfolio risk in check. All my clients know what the best and the worst case scenario in a given year is. I feel that's very important because as long as you're staying in that lane of high and low, you know that your plan is working the way it's intended. It's also important to know what type of a return you can look for long term. That way you can, understand where you're headed. And you don't want to run. So the last thing you want to do is to sell as the market is crashing or falling, because you don't want to lock in those losses. You don't lose until you sell on a down market. What you need to do is play dead, like what you did in 2020. Just sit tight. Market will turn right back. It always does. And also, hopefully, you're fighting back as well. If you have some extra money, when that market's falling and, the novice investors and some of the people are getting out, well, why don't you buy when the market's falling? I had some clients that did that this year. I know they're very happy. Or excuse me, last year. Another thing that we do is we rebalance portfolios. So as the market falls, well, we're going to rebalance. We're going to buy those stocks when they're on sale. That's why your returns are looking so great for 2020. And, as the market goes back up, well, we're going to sell the stocks, when they're high. And, we're going to lock in some of your winnings. That's the smart thing to do. That's the way you fight back. On March 18th, I sent out an email that Andrew Tobias had this little quote. He says, "Torn as we are between greed and fear, we tend to just do the wrong thing. When the economy is sinking fast and stocks faster, we get more and more scared. Finally, we quit in disgust. Better to get out with a big loss," we say to ourselves, "than to watch our holdings disappear altogether. In fact, of course, this is just the time to be getting in the market, not out. Again, that's from Andrew Tobias. He wrote The Only Investment Guide You'll Ever Need. And this little picture underneath it is basically this ugly cycle that a lot of investors are in these days. They wait until the market gets a little higher and they feel like the coast is clear, and then they jump in due to greed. Well, they buy high. And then as the market starts to fall, well, they sell because they're scared they're going to lose all their money. And then they repeat it until broke. I kind of describe it as putting your hand on the stove. Investors, we hate pain. Oh, humans, we hate pain as well. So, as the market falls, it's like we're putting our hand on that stove and we want to pull away because we don't like that pain. But you got to stick through it in order to get the results that you need and want. On March 19th of 2020, I released this email, and basically during the recent market turmoil, investors, they have paid the risk of investing. They should stick around for the reward. Do you understand that? As the market's gone down, you've already paid that risk. So why don't you stick around to get the return and the reward? It's a very important concept. On March 23rd, 2020, well, that's when we rebalanced our accounts. It was really close to the bottom. So we bought when the stocks were really low. This is basically a chart on it here. On March of 23rd, this is basically what it was looking like. And a lot of people, that's when I was getting the most calls, probably was right there when they were really wanting to try to move to cash. And I understand. And I actually enjoy receiving the phone calls. So please keep calling. That's my job, is to keep you on track and to make sure you're making good decisions. But it's hard to do, especially with all the news and the media, and it's just not easy. So congratulations for holding still. On March 26th, I released Should the Stock Market Be in Quarantine? I think that this is a wonderful little piece on the right here. And this is basically the history of the ups and downs of the market from January 26th through December of 2019. And as you can see, that was the depression right there. But after all the blues are when it goes up, and the small little reds is when when the market falls. But as you can see, every time the market goes way up after a decline, every single year in time. Okay, I'm just trying to get you some academic information to make sure you understand we have you on track. Social unrest and protests. Wow. This right here is a piece from May 24th through August 22nd of 2020. And there was battles and violence and strategic developments and protests throughout the United States. And, a lot of it was due to the election. But a lot of it was crazy. 2020 was just a wild, wild year. And it wasn't just in the United States. We had political violence and demonstrations throughout the world. On June 11th of 2020, we sent out a little email talking about the second quarter. But folks, market volatility and scary economic news will come over and over your investment lifetime. Staying committed to a turbulent and unknowable future is part of the discipline required for being a successful long-term investor. I'm going to repeat that one more time. Market volatility and scary economic news will come and go over your lifetime. But you have to be committed to a turbulent and unknowable future so you can make sure you have success being a long-term investor. It's always going to happen every single year. And I'll keep putting things up like this and doing webinars to put your mind at ease. But folks, this happens every year. In fact, 2020 was one of the craziest years I think that I can ever remember. There were 35 daily gains or losses of 3% last year. 35 different gains or losses of 3%. So that's big swings in the market. Over the last 5 years, there's only been 11 moves of 3% or more. And that's in the total of those 5 years. And just one of those 11 big moves over the last 5 years was in a loss of in excess of 4%. So what I'm saying is last year was out of the ordinary. Now, if you look at this, at the reasons to sell, there's all kinds of reasons to sell. If you look hard enough, whether it be political or, something about GameStop or, all kinds of things. And by the way, if anybody has any questions about GameStop, send me an email or click the button underneath this, and I would love to discuss that with you as well. Wow, well, that was crazy. Amid of all this volatility, here we are. Those that stuck with the plan of prudent diversification and rebalancing, we're doing just fine. So when days like yesterday or, they've often done last year, and you feel like you need to sell, stay calm, stick to your plan, and remember this chart. Because there's always going to be reasons to sell. On July 20th of last year, I sent out a piece talking about how quick things turn from, downturns in the past from 2003, 2008, and last year. So where do we go from here? No one knows exactly what's going to happen in the future. But as you can see from the chart below, investors who stayed the course and stuck to their plan throughout each of these unprecedented and historic downturns have come out in a better spot on the other side every time, which is the same thing that's been happening since the start of the stock market. On August 21st, I released this. The good and the bad and the good. So in March 9th, things were a bloodbath. Well, guess what? On August, we're back at an all-time high. It's the way it works, folks. It's the way it works. Just don't sell on a down market. Okay. Here we go. So this is the returns from January 1st to 8/22. Impeachment, a little bump of the road, COVID, and then we're already back. I'm already back. And higher than what we were. It was in August. Well, then we dealt with the never-ending election. On October 15th, I released Politics in Your Portfolio. And I would say that political affiliation causes a lot of stress with investors out there. Because if your person doesn't win, most people feel that the market is going to crash. And that's unfortunate because it's not true. And, during that presentation, I was showing returns on the different presidents. Here's the good news. No matter what president is in office, the market's heading in one direction, and that's up. No matter if it's red or blue. So don't let, the other person in office stress you out to the point to where you feel like you need to go to cash. The most important thing you need to do is to stick to your plan and rebalance. And you're going to be sitting pretty and you're going to reach your goals. And I'm going to help you. October 22nd, I released why it's not worth worrying about the election, how it's going to affect your investments. No, November 5th, you just need to stay calm. And even if everyone around you is reacting to fear, just stay calm. Your plan has been designed to put you on the path to reach your goals. Everything's going to be okay. All right, so here's the complete year. And if you look at it, it looks like it's a complete market cycle all in one year. So 2020 tested us mentally, physically, emotionally, and it also tested our portfolios. We don't take lightly the impact this year's had on many. We also don't take lightly the job you hired us to do. Here we go again. So at the 1st of January, well, this is what we were thinking as investors. Well, how high can it possibly go? Well, then COVID hit. And then we thought to ourselves, well, how low can it possibly go? I mean, are we going to go to zero? Quite a few clients were scared, rightfully so. And by the way, thank you for calling me. Keep calling. Then we thought to ourselves as the year progressed, is there any way it can go higher? I mean, think about this, folks. The market was climbing when everything was just uncertain. You see? Then it kept on going. And then we're back to how high can it possibly go? And that was at the end of the year. January, we're still on a upward trajectory. And I'm still getting calls asking, what's going to happen in the market, what's this and that. But again, folks, you guys, I love to answer all of your questions. And again, probably the most common question is, well, what's the market going to do in 2021, Kevin? And as you know, I'm always going to give you my opinion. But quite honestly, unless I had a crystal ball, I'm not going to be able to consistently tell you exactly what's going to happen. Who the heck would have known about GameStop? That's what moved the markets a little bit this week. And again, they're recovering. But again, the only thing that's going to move these markets is information that we don't know. And quite honestly, I don't have a crystal ball. But what I do have is I have investment knowledge that keeps you on track to reach your goals. And that's what you need to be doing, is concentrating on that instead of worrying about this and that, because those are things that are beyond our control, and unless we got out before that bad news hits us, well, we're probably selling on a low mark, and that's not what we want to do. Anyone that's actually taking income right now, well, I have you set up a certain way. And those that are going to start taking income in the next year or two, I'll be reaching out to you because I've got some really good ideas and want to make sure that we make sure your plan is built to make sure you reach your goals. And I just wanted to say thank you for staying the course. So regardless of what was facing us at the start of 2020, it would have been impossible to anticipate the reactions and the actual outcomes that lie ahead. This is amazing right here. Did you realize that personal income increased in 2020? Yeah, of course, wages went down, but unemployment benefits and the stimulus, that wonderful PPP program, and all of the other income, we actually increased $1 trillion of total disposable personal income. That's a lot of money. Did you realize that? Spending went down. I don't know about you guys, but I my spending went way down. I actually cut back my gym membership, bought me a bike and some weights, and stayed at the home trying to stay safe. Didn't go out to eat hardly at all. Just now starting to go back to out to eat a little bit. But to 2020, that wasn't happening, and also we weren't taking any trips. So we basically saved a whole bunch of money. In fact, we saved 535 billion. So here's to being frugal. I hope each and everyone's financial situation got better in 2020. It should have. Americans, we're now saving a lot more money. So last year, the personal savings went up $1.56 trillion. That's a 173% increase from 2019. Were you aware of that? I would imagine that's eye-opening. So, aren't you glad that if you did have that dream, you didn't go to cash? So again, through those uncertain times, you just have to stay on your plan. So no one knows for certain what 2021 will and beyond will bring us. Nobody. Opportunity, though, manifests around uncertainty. And that is what I want you to leave with today. Opportunity manifests around uncertainty. Your portfolio, it's built to sustain what's to come. So hold tight, stay the course, and let's reach our goals. I wanted to say thank you for joining us today. And I hope you gathered some very useful information out of the webinar today. If you have any questions or if there's anything I can do, please click the button below and I would love to answer anybody's questions. So in conclusion, I wanted to say thanks and I will talk to you soon.